Okay, I understand that. I didn't want to do that either. When I was young, I bought all the books that gave me the indicators because I was looking for the holy grail in the settings. Tell me what the indicators are supposed to be on my chart, what the settings are going to be, and then I'll know how to trade. And that doesn't work. That does not work because if it did, nobody would lose money when they first start trading because everybody does what? They put indicators on their chart. Because I know I have hurt myself and I've actually blown accounts as a young man when trading those days, I learned by having a journal, looking at where I was repeating issues and things that were problematic. Those were the days that I predominantly would dust myself because it's at the beginning of a new month. Like everything else, like a New Year's resolution, people are going to get out there. I'm going to get more muscles. I'm going to get, leaner. I'm going to exercise more. I'm going to save money. I'm going to go on a budget. Everybody starts off with a mindset, excuse me, a paradigm shift in the way they think about what they're going to set out for as a goal, and strive to do very well, hopefully doing that. Well, at the beginning of the month, as a young man, I would have my account funded, saving up money and such. And I would try very hard on the first week, thinking, okay, the weekend's come, I got to make all my money. And then those days going into non-farm payroll would ruin me. So I learned my lesson from that. Now, the market obviously will gyrate around, and I generally get some non-farm payroll analysis ideas right, but not most of them. Okay. Now, if I am honest with you, I'm telling you that up front, and I tell my students this all the time. Why would I? Why would I try to get out there and arm wrestle the market when I know that that is where my kryptonite is? If I can identify where my weaknesses are, and I am mature enough to know that that's where my weaknesses reside, why would I go and do that very thing, challenging whether or not that still exists as a truth? It would be ridiculous, right, for anyone. This is the reason why I don't want to engage. This is exactly why I tell my students don't trade those days, because it's a carnival ride. It's a whole lot of volatility generally coming in, the first 15 or 20 minutes or so after the news release in about 8 or 7 minutes from now. Right now it's 8:22 Eastern time in the U.S. And if you watch this morning and say it completely goes the opposite direction, I'm going to feel vindicated because I'm going to say that this is the reason why I don't do it. Now, worst case scenario, some of you are in here listening to this and you're going to be looking to do something and you're going to try to trade it and look for a move to go to 38.14 or a move to 38.04.5. Okay. And it's going to go the other way, tear your face off, and then you're going to hate me because you did something I told you not to do. So that's why I'm telling you, don't do that. Just observe it. I have no problem sitting out here in front of you, like yesterday, walking you through why I don't trade those days. Because yes, you saw me pick one good move during the move or the market hours after 9:30 to lunchtime or whatever. One good move. That was it. Everything else wasn't doing anything for me. So it's stuck in the mud. So if I know the market is likely to consolidate, gyrate around in a small, meaningless, aimless range, like a sailboat without a rudder, why would you want to go out there and try to show yourself exactly what you already knew in your heart of hearts? You're not going to be able to make money in that particular environment or that market climate because it's waiting for what? The news to drop in less than 7 minutes from now. And then it creates this excitement, this carnival ride. And traders will be out here waiting to do something because there's movement on the charts. So, like a hungry leopard out there in the plains, they're going to be sitting waiting for movement, and the eye catches movement. And then boom, they pounce on it. Well, that's what this event does. Non-farm payroll, NFP in short, I call it not for professionals. Okay. And I wish I could remember who I got that from because it's not original to me, but it stuck with me. Not for professionals was a wonderful analogy for non-farm payroll because while there generally is a lot of excitement that comes out during that time at 8:30 on the first Friday of each month, it's not advised for you as a developing trader and or someone that's profitable. Why would you gamble? Because that's exactly what this is. It's a gamble. You're asking the market, you're daring the market to take money from you. That's what you're doing. You're saying here's the likelihood of me likely losing because it's wild, it's volatile. And sometimes it's not volatile. Sometimes it's a lackluster event. And still you can end up losing money because it doesn't go where you want it to go and just drifts sideways or doesn't do anything. And you get squeezed out of it, and there it is. So there's not what it used to be in the 90s and 80s. It used to be a pretty consistent outcome to non-farm payroll. And that's why it was a steady draw for people to want to do it. And then as electronic trading became a thing, a lot more volatility came in, which brought in more retail interest. This is the day that everybody makes money. No, that's the day everybody loses money. I'm talking collectively as a retail trader, new startup, someone with less experience. Now, I know you're probably going to list 10 people that you see on Instagram or Facebook that show you after the fact, this is what they made with their MT4 accounts. That's forget all that. Okay. We're in the really real world here. I'm ICT, and I'm telling you, I don't know what NFP is going to do. I don't know. So if I don't know, and I don't have a statistical probability that would consistently deliver an edge, why on earth would I trade it? That goes against the whole reason why we are doing anything in these marketplaces, right? We're trying to trade in an environment that is controlling risk and has the opportunity and probabilities for us to succeed. Not a guarantee, because none of this is guaranteed. And then again, this is the reason why I don't like trading in January. I wait till the first Tuesday of February, let the first month get priced in by everybody else out there trying to do something, with their New Year's resolution. They're going to make money. They're going to quit their job in 90 days. All these things, these unrealistic goals and resolutions as a trader. And they're all going to do what? Converge on a day like today, because they have been trained to see social media influencers tell them, I made this much money. I caught the bag on NFP. And you don't know if those trades are real. You don't know if that's a fake MT4 server. You don't know if that is a account that's even yours. You didn't see them execute. You didn't see them show you beforehand why it should do what it should be doing. So it's a matter of whipsaw price action. And it's not altogether, predictable. So I like to have things that are very, very problematic for a retail trader, but advantageous for me. I want to see where there's an arm wrestling match between retail logic and the concepts that I teach you. And there is no consistent delivery of that I have been able to measure and see in non-farm payroll. So if you were to, I guess, poll or ask or sit down and interview the most successful financial traders in the world, if they were honest, they would tell you this right here, you don't want to do this. You don't want to trade in the next minute or so. And then off to the races it goes. There you go. That's exactly why I don't trade non-farm payroll. That was honest. That was 100% real time with you. And because I can't see what it's likely to do or what it's likely to do with a measurable precision, I can't touch it. I can't play in it. I can't do anything with it. So looking at that, why would you be convinced that this is a day where you want to be trading? It's like a CPI number for me. And you watch me do it twice, give you my opinion about what I think it might do, because I want to co-sign. I want to show you this is my opinion. This is not me trading. This is not me putting on a trade. This is me sharing the logic as to why I avoid doing certain things. Because if you're trying to learn how to do something and there is a outcome that's positive and there's an outcome that's negative, if someone knows what they're doing, they should at least know where the likelihood of quicksand, okay, or things that's going to cause you harm, loss. Where's that likely to manifest itself? If it's something that reoccurs over and over and over again, there is merit to understanding how you can avoid that. And I've learned very painfully, losing lots of money, lots of accounts, okay? This particular day and the day leading into it were the main culprits for it. So when I teach my students, a lot of casual readers or viewers will come to me and they'll say, oh yeah, ICT doesn't trade on non-farm payroll. And look at this, I caught this move. Okay. I'm not impressed by that. It doesn't sway me. But unfortunately, other new startups see those opinions being shared and they think, oh, well, I'll adopt that mindset because they probably watch the videos I don't want to watch. So if they came to that conclusion, then therefore it must have merit to it. So I'll just take their opinion and adopt it and not be an independent thinker at all and look into the logic as to why ICT says this or doesn't do that. So for the benefit of those individuals that are just coming to my channel, you can see with great deal of clarity why I teach in my lectures year after year after year. And when I'm on Twitter, I tweet all the time. Retail traders will be regretful moments from now when 8:30 news driver comes out. Okay, so I mean, can you afford in 1 or 2 minutes to be offside, in other words, on the other side of the market against where the market's going? Can you afford to be in a move like that goes against you that quickly? And your stop loss doesn't protect you like it would normally would, because it's going to gap through. I've learned that lesson painfully, and it's not fun. Now, my question to you is, do you really believe when you see these people out there putting 200 lots, 100 lots, 50 lots, that they're really going to risk that on their account and show you after the fact that this is what they did with their little MT4 trade history? That is such a load of crap, because frankly, they would be doing it live. If you were a baller like that, you would be doing it live. You would show the world that you were doing that beforehand, explain that you were doing it, and then do it and be consistent about it. But unfortunately, I have never seen someone trade non-farm payroll consistently profitable. So again, it gets back to, what's the likelihood of you succeeding in something? Do you want to take the highest degree of difficulty in reaching success? Or do you want to say, you know what? This makes perfect sense as to why we should not be doing it, that we should not be worrying about it. And in fact, have a long weekend the first week of every month. On Wednesday, the Wednesday prior to non-farm payroll, you can see it's the first Friday generally of every month. So if you know that that's the likelihood for you to get caught up in something that's not probable, the likelihood of you losing money, being frustrated because it doesn't do what you would expect it to do, there's no rhyme or reason, no logic behind what it's doing. It's causing chaos. It creates, well, movement. And movement causes what? Sentiment to shift. So that shift in sentiment, or establishing a bias, then presents at a later time opportunities for professionals. Right now, look what it's done. One quick sudden movement, 50 handles or less, and now we're just trading right between 38.50 and 38.40. So what was the reason to be long, and why would you trust it to be long and not go down? See, it's absolutely 100% casino time. So to protect my students and to be 100% transparent, I always tell you where my weaknesses are. I have no shame in that. You have to be honest with yourself as you're developing. And if you discover where you have a specific weakness, and if you can't correct it, if you can't combat it, if there's no resolution to it, if there's no way of coping with it so that way it doesn't hurt as much, isn't it better for you to take those precautions? I mean, I don't know where you're from and what school of thought you subscribe to, but I believe that this is the hardest business to engage in because there's so much psychology behind it. And if you go into the marketplace expecting it to just lay gold at your feet because you participated, like it's a participation award, that's unfortunately the mindset of this generation. You think just because you open up an account and you watch people's videos and you studied that it should just fall into your lap. And it doesn't work that way, especially on event days like this or CPI. Even people that know how to trade, and I'm not just saying it about myself, there's other traders that know how to trade, even trade outside of what I teach. And they still can't make money trading CPI or non-farm payroll Fridays. They won't be this candid about it because it would mar their image. I don't care about image. I don't care about it. Because me being viewed or loved or hated has nothing to do with your bottom line. That's the only thing I care about. Do my students learn properly? Am I providing the information honestly? And that way you can see it. I'm executing based on the logic, and I'm also teaching you exactly when I'm not expecting it to work. It's not the algorithm's broke. It's not the algorithm stopped working. They're not changing the algorithm. It's just these are days that there's no rhyme or reason for you to be expecting precision. You just can't do it. I can probably list 2 or 3 times where the market went to a target in 30 years that I had predetermined before 8:30 would start. And honestly, I think maybe one of them was made public. And that was it. Now, you would think if there was something to this day that I had an advantage over, wouldn't I like to be flexing it and showing you publicly? Because I would. I would. That's my personality. I would do it. Just like I showed the precision and everything else. I caught the big move with a lot of ticks or handles earlier in the week. And that's how I train my students. Look when the moves are going to be logical and where it's likely to form. And when you get it, you stop, you close up shop, and don't worry about the rest of the week. Let the retail people trade this. Let them wreck themselves. Let them get mad. Let them get all worked up in a frenzy. You're on an extended weekend every first week of the month. This is your protocol. This is exactly how I teach my students, okay? You are welcome to trade on Monday. You're welcome to trade on Tuesday. London session, New York session, PM session in the afternoon for stock indices. This goes for Forex and futures. But now here's where the deviants come into the conversation. I like ICT. I like some of his stuff, but I'm going to cherry pick this part and remove it from me because I'm going to be the exception of the rule. Don't do this. Here's where you need to listen. You young folks, okay, especially the men. Do not, listen, do not trade after the morning session in Wednesday. So you're welcome to trade up to 10 o'clock, 11 o'clock if you're doing stock indices. But at 11 o'clock, be done. Don't touch it in the afternoon. You'll regret it. Don't touch it on Thursday. You'll regret it. And certainly don't trade on non-farm payroll Fridays. Because chances are you're probably going to be offside, which means you're on the wrong side of the marketplace, and it's going to rip against you. And your stop loss won't be respected. How's that possible, ICT? How I had my stop loss in there. My broker has to get me out at the stop. No, your broker doesn't have to do that. Okay? Because if your stop loss is, for instance, at 38.41 and a half, okay, you're getting filled at 38.50 or higher. That's slippage. Welcome to the real world. Okay? There's no slippage in demo. In paper trading, there's no slippage. And that's why these guys will put that they have 50 contracts on moves like this. And they're not going to tell you what's going to happen before it happens. They're not going to co-sign what they believe before it happens. They're going to show you the history after it happens. That doesn't help you. That's an ego stroking for them. I'm trying to absolutely teach you. Okay, I'm pouring myself out this year. I'm doing everything I can to make you understand why I say the things I say, how I do it, why I don't try to do it on other days. If you want to try to trade like me and learn how to do things that I do with these concepts, it makes sense for you to do what? Subscribe to everything, because every little thing has its place in the way I think about the marketplace. You can't, honestly, in my opinion, you can't come in and just cherry pick certain things that you like me saying. Oh, that sounds cool. But then when I get to the real meat and potatoes of it all, which is these things right here, how do you avoid losing money? Nobody writes books about that. Nobody does that because it's not exciting. Money management books, they're the least bought books. I've already suggested that Ralph Vince, and Ryan Jones, those two fellas, outside of what I teach about it, which is really just, a simplification, if you will, of what they talk about in their books, because they're very boring. They're expensive. Most people won't want to spend that much money on a money management book. Okay, I understand that. I didn't want to do that either. When I was young, I bought all the books that gave me the indicators because I was looking for the holy grail in the settings. Tell me what the indicators are supposed to be on my chart, what the settings are going to be, and then I'll know how to trade. And that doesn't work. That does not work, because if it did, nobody would lose money when they first start trading, because everybody does what? They put indicators on their chart. And unless you know what price is likely to do, how's it going to behave? That's narrative. Behavior is narrative. How's it likely to do certain things? Why should it do those certain things? And then when it does those certain things, what setups, what patterns, what concepts or conceptual theory would be applicable to finding entry in that narrative or in that behavior? And that's a huge chasm of understanding that 99.999% of educators, authors, and pseudo traders don't tackle because they don't know it. If you really want to teach somebody and communicate something to them, you're going to show them both sides of the coin. You're going to show this is the strengths and the advantages, and this is where the weaknesses are. And here's the advantage of knowing how to discern who's a real mentor, who's someone that's been really doing it or not. They're going to sit down and honestly tell you, this is where you're going to have difficulty. This is where it's going to be problematic for you. And why would they want to do that? Number one, they want you to succeed. I want you to succeed. I want you to be doing well at this. I don't want to see you lose. I don't want to see you suffer. I don't want to see you have monetary loss. That's why I teach in a demo. That's the reason why I show my examples in a demo. I mean, you saw live accounts this year, but last year, but irrelevant. When I show you executions using the techniques and concepts that I teach, I'm doing it in a demo. Because if you see your teacher out here with almost 435 or whatever it is, 1,000 people watching me, I'm still repping paper trading. And you see these young men come in there, oh, it's a paper trade, ha, ha, ha. Yes, it is. For compliance reasons, and I'm not a licensed trade advisor. I'm teaching you things that I believe are going to repeat in the future. That's my opinion. I want you to challenge that opinion. As a viewer, I want you to go into your charts and see if the things I'm teaching you are really happening. Is it an advantage? And don't go into it for a weekend or a month and say, okay, I watched some videos, I scribbled a couple catchphrases that he likes to say, and say I took notes and I did the work. That's not the work. The work was like yesterday, where I'm showing you where things will look like a setup. And even I would take a trade if it was another day other than the days going into non-farm payroll. And telling you up front, I'm going to probably get this wrong. Don't follow this as a trade. And you saw it. The market did not perform like I wanted to do, and only one good setup. That's it. That's the line that you need to know where not to cross. Don't go into the badlands, okay? In the marketplace, there's these areas, there's days, these circumstances where you know that you probably are not going to succeed, but you just have to do it. Why? Because your social equity curve needs a new equity high with clout. That's why you're doing it. You want to be able to do well so you can go out on Facebook, on Instagram, on YouTube, on Twitter, TikTok, you name it, wherever it is that you're doing social media, gatherings, and you want to show your peers and your viewers that you were an expert today. You don't want to try to do that on this day. Okay? You don't, because the real experts still can't do it either. Not consistently. And those real experts, the folks that have been doing it a lot longer than these 20-year-olds that just started discovering what a divergence is, what a candlestick is. You want to listen to the old hats because we've been here for a long time and we've seen a lot of things. And unfortunately, we can be stuffy and old and fuddy-duddy and maybe not hip to the new things, okay, the new lingo. But there's wisdom in people that have been doing this, not just me. And I love listening to older traders. I love listening to their stories. I love listening to the logic and the discoveries they've had to find out through pain and loss and how long it took them to do that. I tried to beat this day. It was like a thing for me. Like I had to crack it. And I'm honestly telling you, I was defeated by it. I lost trying to pursue figuring out non-farm payroll. And finally, when at my wit's end, I said, the hell with this. I can't do it. So to avoid that pain of obsessive compulsive disorder that will flare up all the time, when those days would come each month, I would just do nothing. I would do my hobbies. I would do whatever else I was doing other than trading, because I knew impulsively I would do what? Think I see something and trade it and then regret it. How do you avoid doing it? You avoid it altogether. You avoid it. There's no secret to it. If it hurts, it causes you harm, don't do it again. It's simple as that. I don't care how many people around the world can show you after the fact what they supposedly did. Nobody's making a career trading on non-farm payroll Fridays, okay? I'll say it again. Nobody on this spinning rock is making a career trading non-farm payroll. There's all kinds of people out there writing books on how to trade non-farm payroll. There's all kinds of people that have YouTube videos, how to trade non-farm payroll. And they're making money that way. They're telling you, this is where the gold lies. This is where it lays in the ground. Here's where you dig it up. And you're going to do what? You're going to buy their pickaxe and their shovels from them, their wares, their insights. And they're the only one making money. Nobody's finding gold out here. It's fool's gold. You think because it moves around, there's opportunity for you to make money. And when you go in there with your pickaxe and your shovel, you just bought money, you spent money on listening to these other people who haven't made money doing it, can't consistently show that they do it. They're only going to show you a book example in hindsight. That's it. That's all you're going to see. That's all you're going to see. Non-farm payroll, those, we'll just call it 30 minutes, okay, from 8:30 to 9 o'clock. That is such a gamble. It's unbelievable. But because of the velocity and the ferocious delivery of price when it's real quick and sudden, that's like, wow, if I could have done that long, if it goes up, or if I could have been short right before it went down like that, man, I could make so much money. And what are you doing? Think for a second. If you're feeling that way, okay, and some of you probably looked at this morning and said, he got it wrong, but I could have bought that and that would have been so much more money, or I would have done this, or I would have done that. Or maybe some of you listened to this and said, watch this, I'm going to demo trade and fade ICT. And look, I did this, and you're going to come up with all kinds of reasons why after the fact. You're still looking through your charts trying to find some kind of trend line where it lined up for it. Trolls. But you're not going to be consistently able to follow this and make money. But why are you trying to push your career into one small day, one small micro fluctuation? I don't care how big non-farm payroll ever is, or ever has been, or ever will be in one event. That does not convince me that that's the only thing I need to worry about for my career. And see, some of you are going to be thinking, yeah, but we need movement to make money. And you can hear the infancy when people type this or say it in their videos or read it in their books. You need to have movement, and non-farm payroll provides that movement. Yeah, it moves just like CPI does. It will move you out of the industry. It'll move you out of the brokerage firm that you have money deposited in right now. It won't be there. That's the movement that you're going to have. Okay. That's the movement that's going to be the result, because you're going to try to do something and it's going to clean your clock. Done and dusted. It's over. Thank you for playing. Good day. There is no participation award except for regret.